Top of the morning, top of the morning. Back at it again with another one. And today we're looking at the Nasdaq. If you don't know now, you know. Be sure to give us a follow on Twitter. The handle is SCHMDII, SCHMDII. And we'll be posting everything charts, beyond the charts, things of interest. And if you just want to connect and talk markets, that's where to find us. Big day. We got the CPI number, and we had a crazy sell-off. The numbers came out better than expected, but yeah, they took the opportunity to dump on the market, and that's exactly what happened. What's nice though is to see that CPI did follow its protocol, which is the fact that it's a two-stage event. I say two-stage, I mean movement. The initial direction that you'll see as the news is released, that's the fake move. That's the direction that you don't really want to be chasing. And then when market opens at about 9:30, you can expect price to move in the opposite direction. And then, clean textbook CPI movement, or the two-stage factor to it. So I'm just gonna scroll down to the M5, and then we're gonna break it down even more. As you can see, we've just been consolidating through the Asian session the previous day. We consolidated as well in London, and then when New York came, the news came out at about 8:30. 8:30, the news came out. Okay, 8:25, 8:30. Yeah, we got the news, it spiked up, and then for the rest of the day, it just dumped. You can see we spiked up, and then we began to see the true direction about 30-ish so minutes later. We dropped after we struck past the previous day's high. So you notice the bearish power of 3 accumulation, the manipulation, and then the distribution came about. Also handsomely. It was the 11th of July. I'll let you go through your charts, check it out, but ain't not much to it. It's pretty easy. The consolidation, the manipulation came up. You don't want to chase this move here. You don't want to chase that move. You don't want to be smart and try to get the early entry, because for one, let's say, cool, you saw the news being greater than expected. You've been following the current narrative within the market, which is the fact that if we see economic data that suggests that inflation is slowing down, we can anticipate rate cuts. Rate cuts means that it's cheaper to borrow capital for companies, which is a bullish, or it's positive for stocks, and thus Nasdaq, which is basically an index of 100 different tech stocks, they would benefit from the reduced rates and such. So cool, the news comes out, you see this big candle onto the upside. You'd wanna enter in that inefficiency over there, put a stop loss or down over there. You're trying to catch the trade early, and that's not the case. Just wait for the market to open. Ideally, wait for that opening range, the first 30 minutes of the session. If you can't do that, that's fine, fully understandable. We're going to go through a couple of the entries that you could have expected. But you can see now 8:30, we got the 8:35, 8:40. Price came down, had that imbalance over there. One would anticipate it going up to here, but if you go for the lower one, just make allowance in your risk management that it could go up to that high point over there. Price tap that imbalance there. You see how we stuck at the halfway point of this bearish fair value gap? That's a signature from price tilting its hand to you to say, hey, we're about to sell off. If you miss that entry, the next best place to enter would be this failed order block there. failed order block turns into a breaker, right? Failed order block turns into a breaker. So you had the lower high, higher high, took out that liquidity, we stroked down, broke that low over there. We went below the change in the state of delivery. You can see we're delivering bearishly, then there we started delivering bullishly, and then once you cross that opening price of this candle here, we had a change in the state of delivery. We're now going to expect bearish movement, and you can see with this candle it came up here, it hit this. Let me just put this fib over there. I just want you to note how we didn't close above the 50% mark of this order block here, this failed order block. See, in an ideal situation this would offer support, but now we can see that we are now switching from a buy to a sell program. Switched into the sell program close below that low. You can see this area, that's the breaker there. Price comes up, taps into the breaker. We can barely close past that halfway point of this. We just wick past it briefly, and then we start moving down. Price comes up again, offers us another opportunity to hit the breaker or to enter, and then we then proceed to sell off again. We have another one here. See the change in the state of delivery, how we're delivering bearishly, then we suddenly started pushing to the upside. This should offer us support, but as you can see, it didn't. We have another break over there, failed order block, turned into a breaker. Around about 10, this is that silver bullet time, came back up, hit that, and then begin to sell off. I'm just gonna put another fib here on the wick, just for curiosity's sake. What's this thing? Just to measure out. Okay, here we go. Okay, you can see here that candle, another breaker, got another opportunity to enter, even if it was just the, okay, we got two opportunities there, but if we were looking at the 10 o'clock, that's where we would enter. And then it was just so heavy, so heavy. We didn't have much entries or opportunities to enter really. If you weren't entering via this imbalance over there delineated with the red, you could enter short via this breaker. It's delineated in the orange. Let me just move that for now. Delineated in the orange, and you can see another one here delineated in the orange. One would have anticipated price would come and fill up this imbalance, but like I said, it was just so heavy, so heavy. And then as you can see, it just sold off, sold off. I think if we measure from the peak there all the way to this, I'll say this is the low, we saw a drop of about 603 points. Absolutely crazy. But without saying too much, main takeaway that I just really want to emphasize on is the fact that CPI, the two-stage movement event. Note to self, don't chase that initial movement. Don't try and be smart and snap an early entry. Wait for the 9:30 open. If you can, let the opening range pass through. Opening range, I mean the first 30 minutes from market open. So that gap between 9:30 and 10 a.m., if possible, let that play through. If not, and you can see that it's extremely heavy. In this instance, if it was bullish, you do best, but just remember, a two-stage movement. The initial move is the Judas. Wait for price to give you an indication that it's about to reverse and move in the opposite direction, and look for the corresponding PDRAs that will allow you to go or enter in the true direction that is now setting up. I repeat, do not chase the Judas move. Do not chase the Judas move. You can see, I think the first 15, 30, 35, 40, 15. Then it starts moving. Then we get the market open at 9:25. Here you see the drop in the change of state of delivery there. Come back up, tap into that That's the 9:30 open now. Came up again to it at about 9:45, and I think slightly at 9:35. Not really at 9:35, but you see what I'm talking about. Tap, and then just sold off. Beautiful movement. Beautiful movement. Absolutely beautiful movement. Thank God for the skill. Nothing much to say, but I repeat, do not chase that initial move. Do not chase that initial move. Crazy, man. Crazy day. Crazy day. Stay safe and thank God for the skill.